So I get asked this question a lot. The question is, Kamari, what's the best book on personal finance I should read? And a lot of times I'm baffled because I read a lot, but I don't read a lot of personal finance books anymore because I went to school for finance and I worked in finance and tax and accounting for many, many years. So these days I want to read other things. But there is one book I do recommend that everybody reads, and I feel it is the best finance book, not necessarily personal finance, but it's the best foundational finance book that I think everyone should read before they buy a course, before they enroll in somebody's mastermind program, before they take on mentorship with somebody. This is the book I think everybody should read. Oops. How Money Works, The Facts Visually Explained. And so it's a great book. It's not a hard read. Again, How Money Works, The Facts Visually Explained. Now, listen, today is a special edition of the Finance Rebel Show. Y'all know normally we do the Finance Rebel Show live on Wednesdays, our Wealthy Wednesday segment. Today is Thursday, so we had to make some audibles because last night we had a great conversation about that $7 million real estate investment package going on in Philadelphia right now. So we had a great broadcast last night, and I had to move some things around. I was originally going to talk about this book last night, but I switched it up a little bit. So y'all got me for 2 days. And I got something else I want to talk about, so I might come back tomorrow. So again, How Money Works, The Facts Visually Explained. And I think it's a great book, right? There's a lot of pictures, right? There's a lot of pictures. And it breaks down a lot of things, I feel, in really, really simple terms. Now, let's see. There are about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's about 20 chapters in this book, right? But I've already picked out there's about 6 chapters, I think, that are really, really key and critical for you to learn. Now, if you're new here, this is the Finance Rebel Show. My name is Camari Ellis. I'm the Finance Rebel. This channel was all about making wealth black again, right? So if you want to learn about taxes, stocks, business, economics from a black perspective, this is the channel for you. No fluff, no BS, straight no chasing. But again, this book, I feel everybody should get their hands on. All right. It also is in Audible as well. So you can read it in audio. And I just discovered that today. I don't know if I would really listen to this in audio. This is a great reference guide. All right. Great reference guide. So before I get into this, because there are some chapters in here that I've highlighted in advance that I want everybody to take advantage of and take a look at, let me just speak to the people. All right. So Wendy's in the building. Hey, Wendy. Everybody go follow Wendy Coop, the Savvy Budget Girl. She just crossed 1,000 subs on YouTube. So big salute to her on that accomplishment. I know what it feels like to cross these milestones. As y'all all know, it's push 10,000, right? We're Operation Push 10,000. The goal here is to get the channel to 10,000 subs by the end of the year. So I get it. Kagoma, am I saying your name right? But good evening to you too. Welcome. All right. Yes. What is the book? The book is How Money Works. How Money Works. The Facts Visually Explained. So it's not about a topic, right? But it's really all about the system of money and how it works. And we'll get into it in a minute. Just bear with me 1 second. Don Johnson's in the building. What's up, bro? All right, Kagoma says, I swear I have that book somewhere on my shelf, but never read it. You got to read it, man. Reading's fundamental. K Diggy's in the building. What's up, Kay? Welcome. You've been rocking with me 2 nights in a row. Appreciate you. Did you download all those podcasts? It's like over 300 episodes, almost 400 episodes I'm coming down on. D. Simmons. What's up, sir? How are you? Lawrence is in the building, the neighborhood finance guy. Welcome, welcome, welcome. Lawrence says, what's good? I'm here for the financial literacy reading plays. Yes, these are the plays we're doing, all about reading, because we don't need no more financial literacy. I only use that in the title. If you know me, I hate the term financial literacy. One, because it's been hijacked by credit card companies and banks. They're like the guys who give turkeys out during Thanksgiving, but do all kinds of criminal activity and pillage the community all year long. And two, you don't want to just be literate when we come to this thing called finance. You want to be, as my homegirl Toni Moore says, fluent. You want to be fluent. That's not my term. She says finfluent, and I like that. All right, I downloaded the audiobook a minute ago, but I need to actually listen to it now. Yeah, listen to it. You might actually want to get the book too. One of the things that I do, because I listen to a lot of audiobooks, I will get the audiobook, I will listen, but sometimes I need the hardback, I need the visuals. Audios get it, are good, but depending upon if you have a good storyteller or bad storyteller, can really, or narrator, right? Whoever is the narrator of the book really can make or break that book. All right, so if y'all enjoy the Finance Rebel Show, do me a favor, make sure y'all subscribe to the channel. Also, like, share it out to people who need to learn about financial education. Financial education. All right. All right. KD says it's currently $16.19 on Amazon. Listen, I should have gave you my affiliate code. I didn't do that. That's fine. But $16.19 will be a great investment into your overall financial education. All right, Wendy says, thanks. Of course. It's hard out here on these YouTube streets. All right, Bawana Hagu Batsi. Are we speaking Swahili? What are y'all speaking? All right. And KD says yes, and I knocked out 3 while working today. All right, what's 3? Tell me about them. Tell the audience about them. Should they listen to them? Were you bored to death, or did you get some joy? Some of them are replays of this show or these lives. Some of them are solo standalone. So if nobody has listened to the podcast, I would suggest you all listen to the podcast. And I have this new series that I recorded a while ago. It's like a mini series that I'm going to drop on the podcast. I'm trying to decide if I want to do audio only or if I want to do audio and video. And what I did was I interviewed a bunch of Black tax accountants, because I find Black tax accountants, especially in our community, to be at the vanguard or at the very front line of financial education. Usually in our community, the very first financial transaction a Black person has is with their tax person, their tax preparer. So I interviewed a bunch of them, never released it. So I'm like, I should release it. It's good stuff. At least to me it was. But what do y'all think? Should I release it? Audio, visual, both? What do y'all think? Such warm welcome. Yes, sir, I tried. It's all family here. All right, listening to the Superior Man. I'm sure I have listened to that as well. That was pretty good. All right, Lauren says both. Okay. All right. That's the only vote we got, so that's the vote that matters. All right, Dwight says both. Release it. All right, audio or visual or both? Both. Wendy says both. Not B-O-T-H, but B-O-U-F. Like Shannon Sharp says it. Both. All right, so there is a couple of chapters I wanted to highlight, and I think you all should go through these. Right, so I wrote some notes down. So financial instruments, financial markets. Wait a minute, I messed it up. How taxes work. Worth, wealth and income, and managing investments. Now, this whole book is dope. All of it's dope. And I'll just read out some of the chapters. I think everybody should read the whole thing. But if you ain't got the time, you can just kind of pull one out one at a time and then read at it. But these are some of the chapters, right? Money basics, the evolution of money. It talks about money in its original form, from the barter system to IOUs, artifacts of money, so forth and so on. Then the next chapter is corporate accounting. Didn't really want to go through corporate accounting for this one because some of it gets a little too deep. Next one is financial instruments. Next one is financial markets. These are the chapters, by the way. Financial institutions, right? Those are the three we're going to highlight. Financial instruments, financial markets, financial institutions. Wanted to talk about all those things because at some point, just about all of us will be interacting with those. Sometime in the future, close to near, or maybe far out, but at some point you'll be dealing with those. Many of you already deal with financial institutions, whether you have a bank, credit card, credit union, whatever, you're going to be dealing with those. So then the next segment is government, finance, and public money, right? So it talks about the money supply, managing state finance, attempting control, while governments fail financially. This gets deep. And again, it's not boring because it's done very visually and it's done very well. All right. Worth, wealth, and income. That's one of the chapters we'll be covering. Investments for income, wealth building investments, managing investments, pension and retirement, debt, money in the digital age, right? And then it has money in the US, there's an index. So it's not too long, but it can get deep. It can get deep. So let's talk about financial instruments. Let's go to that one. Now, did any of those chapters that I sounded out, did any of those grab your attention? Now, this is corporate accounting. This is how it looks. So it's not your typical boring book, line by line, whole bunch of lines put together. All right, so this one says 216 billion cash reserves held by Apple in April 2016 out of 1.7 trillion held by U.S. non-financial companies at that time. So in April 2016, Apple had $216 billion in cash. That's a lot of money for a corporation. Now, does anybody know the market capitalization of Apple right now? Now, $1.7 trillion were held by U.S. non-financial companies at that time. What does that tell you? It tells you a lot. Now, like I said, we're not going to cover that chapter, but that just caught my eye. If you are a business owner, it behooves you to read this book. If y'all really serious about getting y'all paper, y'all money, y'all cheddar, y'all cheese, y'all chicken, it behooves you to read this book, especially if you're serious about building wealth for you, yourself, your family, and your overall community. So just keep that in mind. Keep that in mind. All right, so we're going to go to, let's see here, first page, financial instruments. Give me 1 second, y'all. I think I went by it. And I just had it. All right, financial markets, derivatives, bonds, shares. All right, here we go. Financial instruments. All right, and it looks like Lawrence pulled it up. Lawrence says nearly $3 trillion in Apple. Apple's market cap is $3 trillion. Then he asked me a question, am I invested in Apple? No, I am not invested in Apple at the time. I have been previously. I will say this, Warren Buffett says one thing about Apple that I agree with. He says Apple is probably the best run company in the world. All right, Still Rocks is getting here late. Welcome, welcome, welcome. The name of the book. The name of the book, hopefully I won't lose my page this time, right? How Money Works. How Money Works. The facts visually explained. Right? The facts visually explained. How money works. Let me take that off the screen. Wait a minute. Got all kind of stuff going. Oh, I know what it is. I got to take that off the screen too. There we go. There we go. All right. So how money works, the facts visually explained. Got it? Y'all got it now? Yup, $3 trillion. Now, to Lawrence's point, had I been invested, I would be participating in that $3 trillion in growth. But I got my money in some other places. Now, I've talked to y'all about this. Dave, if y'all watched last night at all, and I done lost my page. Fumbling and bumbling around. All right, here we go. Not that far around. Now, Dave was on last night, and he was like, Camari, you talked about it. I ain't going to talk about it today. I got to go back. Said, you recommended a stock on your show that's damn near quadrupled in value. Couple times. That's good money, and I didn't even have to pay you for it. So listen, when you watch the Finance Rebel show, you get an education, and every now and again, I'll give you a tip. But this show is not this is not investment advice. This is for education, entertainment purposes only. Only. All right, so don't sit here and say that I told you to buy an investment. I'm only here to help guide you to buy investments better. Ain't no quick tips, ain't no hot tips. All those are bullshit, in my opinion. So when you hear people talk like that, beware, be very cautious. I see way too many people just jumping on people's bandwagon, and they don't even know what's on the bandwagon, right? They're just following along. And that's cool if you understand what the play is, if you understand what the play is. You know, because everybody want to run the play. But if you don't understand what the play is, then you're taking a blind risk. You might as well put a bullet in the gun chamber, spin it, pull a trigger, and hope that you can still live. Russian roulette, no fun. So I don't want y'all playing Russian roulette with y'all money. I want y'all to be safe, sound, and secure with y'all funds. All right, know what y'all doing. Yes, it will take some work. Yes, you have to be patient. It's not rocket science. It's not what's the pill on the Matrix? Was it the red pill or the blue pill? Right, there is no magic pill to magically just wake up and say, oh, I'm rich today. I hit the lottery. The lottery's bullshit, by the way. Excuse my language for those who never heard me talk like this. But a lot of us are chasing these get-rich-quick schemes, and they don't work. They'd be much better off spending that Powerball money, that Mega Millions money, buy ETF. We've talked about it several times, right? That same money you could buy a stock with. All right, so financial instruments, that's what we're talking about, right? Financial instruments. See, I got the book kind of dog-eared a little bit. And this is what page is this? This is page 46 and 47. So if you already had the book or you plan on getting the book and going along with this, it says a financial instrument is something that has value and can be traded. This might be cash or currency, shares, assets, or debt and loans. It can include evidence of an ownership of interest in a company or other entity. Many records of financial instruments are now held electronically. All right, so I'm not going to read the whole thing to y'all, right? But just something I wanted to highlight. How they work. Financial instruments are legal arrangements, okay? They're legal arrangements that require one party to pay or promise to pay money or something else that has value to another person or organization. They are usually conditions attached to an agreement. These conditions might cover the amount and timing of payments of interest, cash, capital gains, premiums, or provisions of insurance cover as part of the arrangement. As proof of that, you own a financial instrument. You might hold an actual document, such as a share certificate. By the way, you can still buy share certificates from companies that are out there. They charge you for the framing and the paper. It's like really expensive. But I do think it's good, especially for giving. So there's a bit of a premium. But if you want to give your kid a share of Disney, a share of McDonald's, there are sites out there where you can get the actual certificate. You own the stock and you can frame it on the wall or give it to someone. I'm going to give some to my grandkids really, really soon. So, just think about that. Yes, I have grandkids. I know. I look too young to have grandkids, but I do. Now it says, why hold financial instruments? So again, remember, a stock is a financial instrument. A CD is a financial instrument. A loan is a financial instrument. These are all instruments. Okay. Okay, Jake. Jigga 1017, you asked the question and answered it all at the same time. Why do you say the lottery is trash aside from the odds? You answered that own question. Anybody else want to jump in on that one? Help me out, y'all. The odds are trash. You probably have more probability of getting hit by lightning than hitting the lottery. Now, again, I ain't trying to spoil nobody's fun. I know people like to have fun with it. But I don't know. I guess when I was growing up, I would see people go into the lottery place, spend $20 a day. God's going to get the number. One of my parents used to say that too. They're going to deliver me this number. It's been over 30 years, I ain't hit yet. What could have happened paying $20 a day? I need y'all to also learn, this isn't in the book, but I want y'all just to look up TVM, time value of money. TVM, time value of money. If y'all gonna be serious about wealth creation, y'all need to know that. TVM, time value of money. All right, so why hold financial instruments? Growth and dividends. Investors buy and trade financial instruments in order to receive a straightforward capital gain, or to receive interest from a bond, or from dividends of shares, right? Another reason why you hold a financial instrument. Risk control. Buying assets that perform independently of each other. Shares from one country, government bonds from another, for example, can help reduce in a portfolio. Now, y'all have heard me talk a lot about asset allocation. That's a major part of asset allocation and diversification that you should understand. All right, preparing for the unexpected. An investor wishing to hedge their portfolio might buy insurance against the portfolio falling in value. Holding an insurance certificate gives the protection against losses that have been set out and agreed upon in the policy. All right, so keep that in mind, y'all. Keep that in mind, y'all. So some other things, again, just showing the book. Here it says shares. That's a form of financial instrument. Derivatives, options, and futures. That's another financial instrument. Bonds and loans. Another financial instrument. Currency, insurance, or funds like mutual funds, ETFs, things like that. Another factoid right here, 16% rise in the value of Google shares in a single day on Friday, July 17th, 2015. What's today? Oh, we missed about 12 days. The day is the 27th. So Google, which is no longer called Google, does anybody know what Google is now called? Put it in the chat for me, y'all. Now, here's a little need to know. Again, this is need to know. Right there. Visual. Capital gains, profit from the sale of assets such as shares. So when you sell stock, you get capital gains. Guess what? When you sell a house, you get capital gains. What's a stock? What's real estate? It's capital, right? So keep that in mind, y'all. And the reason why this is important, again, if we're going to be about the business of creating wealth, you have to understand the language of wealth as well. All right, risk. Now, this is the thing I never hear any social media guru talk about. Nobody talks about risk. But if you're really about that wealth life, you're managing your risk. You're looking at risk. You're understanding how much risk you can take and what is a good risk reward. Does anybody understand what I mean when I say risk reward? Is it really worth it? If you can make $1, if you can risk $1, right? Do you have a potential of losing that dollar? And let's say you can make the reward will be $3. You can make $3. You can risk $1, but the reward will be $3. Is that a good risk reward? I would say maybe, depending on what it is, right? Now, this is another need to know caption here. Portfolio, a range of investments held either by an individual or by an organization. Now, I believe it was K. Diggy that said this book is only 16.19. Now, y'all hear these terms thrown around about all kinds of ignorant and uneducated people on social media, professing that they are grand wizards of the stocks, the real estates, the Bitcoin, the cryptocurrency. If you get this book, now you can really get a true command of what's going on there. All right, so those are financial instruments. They go deeper in the shares, right? Deeper in the shares, they break it down. They talk about how a share, a stock share, is just a piece of a company, a piece of ownership in a company. Then they talk about bonds. Bonds are nothing but IOUs. Bonds are loans. So when you hear people talk about government bonds, people are giving the government IOUs. They're loaning the government money when they get bonds. Derivatives. I advise y'all know the Finance Rebel Show is really only for beginners, right? So I would advise all y'all to stay away from derivatives. But what are they? I'll tell you what they are. Futures, forwards, options. Derivative just means it's pulling off of somebody else or something else. So futures pulls from other stock contracts. The price of a future pulls from other stock contracts or other, let's say, oil contracts or gold contracts, right? There's also currency futures. They pull from different currencies, whether it be the yen or the pound or the euro or the yen. I said the yen. Look those up, though. I advise all y'all to stay away from derivatives. Now, the next section, financial markets. Now, in the middle, okay, they can say Google is now Alphabet. So one of the things y'all should all do is look at how Google changed its name to Alphabet, because Google had a whole slew of other portfolios under its company's ownership. And so Google didn't quite represent everything that they were doing, because Google has all kinds of stuff under the umbrella. Venture capital, driving car investments, all kinds of things. So it wasn't just Google, the search engine. So they wanted to have something that was representative of everything. So they called it Alphabet. Now, I don't know how it's Alphabet is representative of everything. If you say they got the whole alphabet, A to Z, I mean, I guess maybe, but that's what they got. That's what they got. All right. So the next thing we're going to cover real quick, financial markets. The flow of money around the world is essentially for businesses to operate and grow. Stock markets are places where individual investors and corporations can trade currencies, invest in companies, and arrange loans. Without the global financial markets, governments would not be able to borrow money. Companies would not have access to capital they need to expand. And investors and individuals would not be able to buy and sell foreign currencies. So the world's economies all flow through financial markets, whether it's the bond market, the stock market, the currency market. By the way, the currency market is the biggest out of all of them on a daily basis. So in order to flow, the world needs markets. Now, I think this is cool also. It illustrates the clock here, the world clock. So they're talking about London, New York, and Tokyo. So typically every day when the markets open, they open in Asia first. I'm in Philly. That's Eastern Standard Time. So by the time I go to bed, the Japanese and Asian markets are starting to open. By the time I get up, let's say 6 or 7 in the morning, the London and Paris markets are open. So Europe's open for business. And then, last but not least, the United States opens roughly around 9:30. Now, don't get linear with me on this, y'all, because what I mean by linear, it's not necessarily 1, 2, 3, A, B, C. It's not a straight line, because sometimes you have pre-market trading that's going on. People are getting busy and making money and doing all kinds of things. So this is interesting. Again, financial markets around the world. New York, the United States. The New York Stock Exchange, NYSE, is the largest in the world market capitalization. The market value of its outstanding shares, $14.14 trillion, followed by the NASDAQ, which is also based in New York, $5.63, guess what? Trillion dollars, right? So New York is definitely getting the money. So another major stock exchange in the United States, or in the Americas, to be more exact, is the exchange in Toronto, Canada. The Toronto Stock Market, TSE, in Canada is run by the TMX Group, and they hold $1.45 trillion. All right? Again, I'm not making this up. This is in the book. Now, the next one, we're going to Tokyo, Japan, the Japanese Exchange Group, JPX, based in Japan, is the largest exchange in Asia, handling 3.73 trillion in trades. China has an exchange, right? That one is in Shanghai. All right, but here it says China has 3 stock markets. The Shanghai stock market, SSE, handles 2.9 trillion. Shenzhen Stock Exchange, SZSE, 2.36 trillion is what it handles. And the Stock Exchange of Hong Kong. Now, normally when I first started, Hong Kong was its own province. So a lot of times I still don't think of Hong Kong as China. But since then, Hong Kong has been absorbed into China somewhat. All right. Then we talk about London. The London Stock Exchange, LSE, is Europe's largest stock market, which is $2.68 trillion. Then we have the EU, or the European Union, which is run by Euronext, has headquarters in Amsterdam, Brussels, Lisbon, London, and Paris, handles 2.56 trillion. Then we have Frankfurt, Germany. Deutsche Börse is based in Frankfurt. FWB, they handle $1.21 trillion. So there's a lot going on. There's money everywhere. Now Pascal's out here cracking jokes. He said the Illuminati is everywhere. You want to get me banned by them folks. All right, so here's an interesting term. Rogue trader. Has anybody heard of the term rogue trader before? So a rogue trader who makes high risk, speculative, unauthorized trades, you can look this term up, by the way, usually financial, right? So the key words in there, a trader who makes high risk, speculative, unauthorized trades, usually financial, right? They're talking about that. Now there's another term here that's interesting, profiteering. Large gains may be made by buying a share at a low price, then selling it as it rises, but before it peaks. So people will kind of get in early and then take their money early. All right. Then here it breaks down money markets, how they work. Again, these are things that everyday people need to understand when it comes to managing their money. Now, I know Lawrence understands all this stuff because he has his own platform as well, the Neighborhood Finance Guy. And Lawrence, what is the name of your podcast? Put that in the chat for me. Then it also talks about the foreign exchange and trading, how that all works. Again, I feel for us to become financially educated, forget financial literacy, financially educated, financially fluent, this book helps you get there. Then it talks about primary and secondary markets. Now, does anybody know what primary and secondary markets are? They are in the stock market, just to give you a clue. So the primary market, you might have heard the term called IPO, or initial public offering. That's the primary market. The secondary market is when everyday people are just buying and selling stocks on the NYSE or over in London freely. They've already been issued. So now they're in the secondary market. That's very important to understand. But then it talks about predictive markets. It talks about fundamental analysis, technical analysis. Again, very, very good book. It talks about arbitrage. I'm not going to get into arbitrage today. But arbitrage is basically making profits or making money instantaneously. So you can do it almost in an instant. All right. They talk about manipulating the stock market. God knows that's been in the news for a lot. They talk about day trading, right? Scalping, margin trading, bid offer spread, excuse me, market data. I mean, it's a lot, right? So I don't expect you all to read this in one sitting. It's great to come back. Like I said, read it for a little bit, get reference, then research a little bit of what you read on, go a little bit deeper. Now, this is interesting. Going deeper into financial institutions, right? They talk about service fees. They talk about Lehman Brothers. Does anybody remember Lehman Brothers? I might be dating myself. $639 billion value of Lehman Brothers. It was an investment bank when it filed for bankruptcy in 2008. $639 billion this company was valued at in 2008 when it filed for bankruptcy. Does that even make sense to y'all? How can a company be valued at $639 billion with a B dollars and file bankruptcy? All right, so also talking about commercial and mortgage banks. A lot of us in the audience have mortgages, have homes. So you should understand how those institutions work. Then they talk about investment banks. Now, I know a lot of times these terms are kind of thrown out on, financial pornography news, but I feel like a lot of times people just glaze over them. And they're not really difficult terms to understand, but a lot of us aren't doing homework and research, so that stops today. Here is a great resource for you to get into. So again, How Money Works. This is the book for those who are just joining. The Facts Visually Explained. How Money Works, the Facts Visually Explained. All right. So again, it has all kinds of things here. Investment rates. How tax works. Now, this is one of the pieces I wanted to talk about. Yeah, all right, so I'm in order. Taxation is the main way in which governments raise revenue needed to pay for public spending. Governments may tax the public directly, for instance, through income tax, or indirectly via a VAT or VAT, which stands for value added tax. You hear about that a lot in Europe. All right, so here it says how it works. Governments have the unique privilege of being able to demand that anyone in their company, in their country, pay taxes. These can be divided into direct taxes, which are paid from earnings, either by people or institutions, and indirect taxes, which are paid for out of consumer spending. So, indirect tax might be a sales tax, right? Y'all know I've talked about all the different kinds of taxes, right? Sales tax, real estate tax, cell phone tax, tax. There's a bunch of taxes out there. All right, income tax, state tax. I'm in Philadelphia, so there is a local wage tax. There's also a business tax for businesses as well. All right, so taxes and behavior. Some taxes are designed to reduce the amount of revenue that goods earn because a newly levied or increased tax on a product puts up its price. That item becomes less attractive to buy, where a product is harmful. Higher taxes, think cigarettes. All right, higher taxes such as cigarettes, oh, there it is, can be a way to reduce public consumption. Some people will also call those like sin tax, right? Where you, again, in Philadelphia, there's a tax on cigarettes, there's a tax on liquor, right? I'm sure there's a bunch of other taxes in way of things the government wants to discourage behavior in. Taxes are absolutely a way of social engineering a country or a town or a state. All right. Now, I wanted to go over worth, wealth, and income. Give me 1 second. But again, I really want y'all to buy this book. Dog ear it. Get acquainted with it. Oh, I didn't even see this one before. There's another page in here called The Level of Taxation. Listen, I'm dogmatic about taxes because not only is my business from it, but listen, over your lifetime, more than likely your biggest expense is going to be tax. Now, I just ran down a bunch of taxes that people get hit with all the time. So I believe it's in everybody's best interest to understand tax at a great level because it understands you and understands how you spend your money. So you need to understand it. Now, the other reason why I'm really fascinated by tax is including every financial transaction, there's tax somehow, some kind of way. So you need to understand that. Whether you sell a house, buy a house, there are taxes. Can't get away from them. Let's see here. All right, worth, wealth, and income. Worth, wealth, and income. Wealth is a measure of the value of assets owned by an individual, group, or country. I'm going to read that again. Wealth is a measure of the value of the assets owned by an individual, group, or country. An individual's net worth is the value of any assets owned minus any debt owed, credit cards, mortgage, car loan, things like that, or personal liabilities. Income is earned through working and can also be gained from assets owned. Think of stocks, think of residential real estate, think of commercial real estate. They both can be rented out, they both can generate income. All right, being aware of their net position can make it much easier for individuals to set financial goals. Now, I want to highlight Lawrence right now. Lawrence does a great job on his blog. I believe is your blog the Neighborhood Finance Guide or is it the Financial Griot? but Lawrence actually lists out his net worth. And he's always talking about he's about to become a millionaire, or he is already a millionaire. I'm trying to get Lawrence to let me hold a couple dollars, but he's a little tight with his money. But if y'all could just say, Lawrence, loan my man Camari a couple dollars, help him out. I think that might give him a little push, little nudge. All right. Now, I thought this was really good. There's a section here that talks about planning for financial independence, because that's what it should really be about. All right. First position, asset situation. Second position, set financial goals. Third position, increase savings from income. The fourth one says manage debt. Fifth one says use investment payouts. Sixth one says financial independence. So they're breaking it down into 6 steps. All right, about that Bible is in the building as well. You know what, Pascal, I didn't give you the horns. My apologies. I was so excited about this book. Now, you know I'm a nerd if I get excited about books, right? All right, and then in this section, it also talks about calculating and analyzing your net worth. Now, if y'all were listening and paying attention and taking notes, I just kind of told y'all what the calculation was. Assets minus liabilities equals net worth. That's fun math. That's that good math. All right, so it just talks about liquid assets, investment assets, personal assets, short-term liabilities, long-term liabilities, contingent liabilities. It's all good stuff. And as you get more acquainted and more intimate with this language and these concepts, you'll be able to truly take control of your money. All right. Now, income and wealth. 2 of the key components of personal finance, income and wealth, represent different states of an individual's finances. Income is moving and often unstable, while wealth is mainly static and stable. So a lot of people get this confused. They get confused on how much money they make being how much wealth they have. Now, the 2 are linked, but not directly. Because I know a lot of people that have high incomes but are broke. They ain't got no wealth. Because they spend every dime they get, and they rake up all kinds of debt. Just happens. All right, now here, it even talks about rental income for property. I know a lot of y'all are interested in rental income for property. So, again, and they also talk about life insurance. Y'all know I'm a big believer in life insurance. So this section here is, let's see here. This section here is almost done, y'all. Almost done. What questions do you have? Go ahead and throw them in the chat if you have any. Managing investments. I'm trying to find that, the last piece of this. Like I said, there's a lot of different stuff in here that I think everybody should get acquainted with. I believe everybody should get acquainted with, because it will help you in your guide, in your journey to start building wealth, understanding the verbiage, understanding, like intimately understanding it, and not just saying, oh, I get it, and just kind of shrugging it off, but like really intimately understanding what we're talking about, what it is. And again, this is your education. So one of the best investments anybody can do is invest in themselves. What's the saying Ben Franklin said? An investment in education pays the highest dividend or the highest interest, something like that. Anybody have that quote? Can they put it in the comments for me? All right, I'm looking at this last page. I mean, this thing is fascinating in my opinion, but I'm a nerd. All right, managing investments. Investments are something individuals buy or put money into in order to make a profit or return, right? Profit and return often are synonymous. So just keep that in mind. There are different types of investments known as investment classes, each of which offers a different type of return. Investors may receive interest from cash or bonds, dividends from shares, rent from property, or capital gains when they sell the asset, which is the difference between the purchase and the sales price. Now, from a tax perspective, that can get a little bit more funky, but we'll save that for another time. Investors can manage their own investments or pay someone else to do it. Right. Again, it still lovely illustrates this. I know one of my listeners, Miss Edie, brought this book and started showing it to her grandchild. I mean, I think the visual representations here make it really easy to bring your child along in this overall process. Now, this wasn't something that I listed out in the beginning that I was going to talk about, but I want to talk about it. So, asset allocation and diversification, I mentioned it earlier. To reduce the risk of their investments, investors often try to diversify their portfolio, spreading the risk they are exposed to by investing in different assets, different sectors, or different regions. I never, ever hear any social media guru talk about asset allocation. That should tell you something. So I'm going to read this. I'm going to take my time with this one because this is really important. All right, strategic asset allocation. A defensive investor may choose to use strategic asset allocation. This involves investing in a combination of assets, taking into account the expected returns for each asset class. Listen, each asset class has its own characteristics, has its own behavior. Stocks operate differently than bonds. Typically, stocks operate differently than real estate. Stocks operate differently than cash. Stocks operate differently than currencies. So you need to understand the characteristics of an asset and figure out how to best put them together. All right. And then so here it does a really good job of laying out what defensive investments are, what alternative investments are, talks about investment returns, talks about asset allocation models. So you talk about defensive asset allocation models. So I'm going to read this. So asset allocation models, defensive asset allocation model is a small portion of equities, stocks, and shares, with the bulk of the capital invested in less volatile asset classes such as bonds and cash. Now, can y'all think of anybody who would probably do good in a defensive or using a defensive asset allocation model? Throw it in the chat for me. All right, the other one, an income asset allocation model. Most of the investments in bonds and alternative assets. This model is designed for income-seeking investors willing to take on a reasonable degree of risk. Who would that be ideal for? Who would that be ideal for? All right, the income and growth asset allocation model is around half of the fund is in equities, which are stocks or shares, with the remainder in bonds and alternative assets. The model focuses on a return composed of both capital growth and income. All right, the last one. This is the growth asset allocation model. Most of the investment in equities, most of the investments in the growth asset allocation model are in equities, but some in bonds and alternative assets. This model aims for a longer term capital growth. So, I mean, that's a lot to chew on. All right. But I want y'all to start really investigating and thinking about asset allocation, diversification. Here's another one I talk about. Dollar cost averaging, DCA, dollar cost averaging. Dollar cost averaging is the practice of building up investment capital gradually over time rather than investing in the initial lump sum. So when you think about what you're doing when you invest in your 401k, so let's say you take $25 every payday, you invest it into your 401k, and let's say at the 4 pay period, you got $100. Some people don't like that. They just want to dump in the $100. And again, these are all hypothetical questions or made up situations, right? This is not investment advice.
It's only entertainment.
Keep that in mind. All right. Now, how does asset allocation work? How it works. Catching the bottom of the stock market to get the best unit price is difficult. And even the experts get it wrong sometimes. Experts get it wrong a lot. Have any of y'all ever watched how bad people tear up Jim Cramer? All right. One way for investors to smooth out the market's highs and lows is to spread or drip feed money into investments instead of investing it all in one go. This is known as dollar cost averaging, right? Dollar cost averaging, DCA, dollar cost averaging. For example, if $100 a month is invested into a fund, the sum of money would buy fewer shares when the cost is high and more units when the cost is low, right? So it just catches the wave, just rides the wave. The average cost per share over time is the mean of highs and lows. Average, mean, mode. Don't want to get too statistical with y'all. As well as freeing investors from having to second guess market movements. This approach encourages regular investing each month, right? You build the habit. It's probably one of the best things to do when it comes to investments. For average, everyday people, just build the habit. Dollar cost averaging can be especially beneficial in a falling market as the cost per unit is lower. All right. Again, that's just few of the samples from How Money Works, the facts visually explained. Again, How Money Works, the facts visually explained. All right. You all should go out and get a copy of this, get the hard copy, get the audio book if you want, but make sure y'all take advantage of some of these jewels and also read through it, peruse through it, have fun with it, put it down, go back to it, use it as a reference. It will be a great guide for you. All right, so I'm going to go back. I'm going to go back and go through some of the questions we have here. All right, Akira got it last year. Now, Akira, did you hear me talk about that? Because I've talked about it a couple of times. This is the first time I'm going in depth with it. Yes, sir. JT is in the building. Welcome, welcome, welcome. All right. So sophisticated. All right, let's get back here. All right, so K Diggy said he started at episode 1 on the Finance Rebel podcast, The Creed. I need to go revisit that myself. But that creed is something that it guides me, right? I have it written down somewhere, but it guides me. Like I know in the creed I talked about, everything isn't necessarily about money. Like, for example, y'all know I don't rock with prison stocks. By the way, prison stocks are also classified as REITs. I won't invest in them because they do harm. So I know one of my creeds is not to intentionally do harm, just like doctors. But that's my creed. It's part of the rebel creed. But if I know something is intentionally doing harm, I don't want no parts of it. I believe investing in my soul is an important investment. I know some people just want the return. I get it. All right. So Lauren says, are we invested in the direct question? We can talk about it and we can set up ways to win. how wealth works and money works. Not sure what the context is of that, Lawrence, but I'm sure it was from a great place. All right, and Jig already answered this. Why do I say the lottery is trash? The lottery is double trash. All right, KD says my uncle used to tell people about investing when they bought lottery tickets. Exactly. Shout out to your uncle. Tell him I love him. They fired him from the convenience store. Wow. Yeah, he's in direct competition. Funny enough, he was working there to pay off his house early. Shout out to your uncle. It sounds like your uncle's a genius. Yes, Google is Alphabet. Pascal. Now, K Diggy, this is kind of funny to me though. He was working at a convenience store to pay off his house early. And I'm guessing he's at the register. Like I'm visualizing him being at the register, people going to buy lottery tickets, and him saying, like, you can invest that $20 lottery ticket expense into some stocks. You can dollar cost average, you can DCA. All right, so we talked about that. All right, so listen. Lawrence's podcast, the Financial Griot podcast. He says we definitely need to get you on to share your financial story. Listen, Anthony already had me telling him my financial story. Almost had me in tears. Had me crying out here in these social media streets. Got me out here being a vulnerable man. I'm trying to be an alpha man. Trying to be vulnerable, but they had me out here crying. Lawrence, meanwhile, some garbage videos have thousands of viewers. Yeah, but you know what? So Lawrence's podcast is pretty good. I'm gonna say this: our job is, yes, we have to promote as much, but for me, this is a labor of love. So yes, I am pushing for 10,000. However, I am not motivated by views and likes. You're not going to see me on here dancing, two-stepping. Not going to happen. And that's no diss to people who do. It's just not my ministry. It's not my calling. So, all right, Anthony's in the building. Everybody go follow About That Wallet. That's what I was talking about, who had me almost crying out here in these streets, talking about some of my saddest days in this whole financial journey when I was a financial advisor. Now that's spicy. I'm afraid to even read that. Should there be a pause after that? So Anthony asked me, what is your favorite position? And then I think he got it. He said the position in the book. So shout out to About That Wallet. He said, the position in the book, I realized it didn't turn out right. Yeah, I guess that was a Freudian slip. Big Jim Cruz is in the building. Welcome, sir. Jim Cruz says, thank you for sharing this knowledge. Well, thank you for being here to receive it. Do me a favor, absorb it and use it. This does nothing just staying here on this broadcast, right? Get the book, read the book, utilize it, increase your financial education level, and y'all gonna be prosperous. And that's what this is really about. JT Coins in the building says, thanks for sharing this book. Absolutely. Okay, Akira said it was from me. Okay, all right, cool. So that means I'm doing my job. And Akira is here often. So thank you, Akira. You're part of the battery that's in my back to keep going. Akira 34 says, when the student is ready, the teacher will appear. That's what you two are. I appreciate that. And JT gives the coin, the pause. And listen, I don't even play the pause game. I'm too old to play it. But it is funny at sometimes. I must admit it is funny sometimes. I am too old for it, though. And I'm cool with who I am as a man. So, again, anybody have any questions, comments, concerns about the book? Now, I'm going to say this somebody brought up Amazon. Most of y'all are black. So buy this book, try to get it through a black bookstore. Buy it through them, order it through them. Yes, you can get it from Amazon too. But what would I be if I don't pub black business? It's just in me. So keep that in mind, y'all. Keep that in mind. JT said he's my first super chat. Jeez. Hold on. Was it you or was it Bob the Hood? But you here now and you super chatted now, so we giving it to you. So thank you, JT. I appreciate you. All right, Jim Cruz says, tell me a little bit about the life insurance part of the book. Now, we've been talking a lot about life insurance. Matter of fact, Anthony, myself, and Lawrence did a whole broadcast on life insurance. I do feel like we need to redo it because we missed some of it. But life insurance, especially for people that have children, to me is imperative. All right. So JT Cohen said yes when I first got monetized. I think I remember that. So listen, I appreciate you, brother. You always on here and you always support me. I appreciate you. If I haven't told you recently, I appreciate you. I appreciate you. All right. So going back to Big Jim's question, talking about life insurance. All right. So let me find it real quick. Any other questions, thoughts, concerns, comments, throw them in the chat. But I feel personally that life insurance is probably the most powerful financial vehicle ever created. If you're concerned about creating wealth for yourself and your family beyond yourself, you can buy a policy. If you qualify, everybody does not qualify. For health reasons. You have to qualify for life insurance. That's what gets a lot of people jammed up. They wait to get life insurance and then they cannot qualify for it. So it's best to get it early. However, there are some unscrupulous people that are in the life insurance field. Not all, but some. And they cause problems. And I be cussing at them regularly. But at the end of the day, life insurance is about protecting your income. So the whole idea of life insurance is if you die prematurely, your family is not able to replace your income because you are no longer here. And so, since they can't replace your income, they need something to come. Now, to me, a man who has children and a wife and all of that, I know that a lot of times the ladies fall prey to some guy who supposedly got money and will manipulate that because income has been cut by whatever percentage, right? So I never want my wife to be in a precarious position to have to want to go to some dude, just call him dude, for money. I want to think past this, right? Life is very fragile. So what is she going to be able to do? I can't just account for her and cover her and protect for her and provide for her now. I should also be thinking about those things in the future as well. Now, this is a total aside. Can we all start boycotting financial podcasts? They all suck. I think there's like maybe one or two that are okay. Especially the women bashing ones. They suck. All right, I have it here. So, Jim, make sure you get this book so you can read this for yourself. All right. Life assurance, and it talks about life insurance Here, it talks about different types of life insurance: decreasing term, family income benefit, variable life, level term life, whole life, endowment, with profit, final expense, maximum coverage, universal. Very, very interesting. So this is what it says here. Life insurance, also called life insurance. This covers the holder for a fixed period of time with their estate receiving a payout. Typically, there is a beneficiary that is designated to get these funds, and people will get them income tax free. Income tax free. Now, if you're a super baller and you got lots of money, there are times when you have like $12 million or more where your life insurance can be included in your entire estate. Most people will never have that problem. All right. So, with their estate receiving a payout if they die with the term stated in the contract. So, if you get a 10-year term policy, it will last for 10 years. You pay premiums for 10 years. Your policy will stay in force as long as you pay the premiums over that 10 years. Same thing if it's a 20-year term policy. Now, you could also have a whole life policy. Term policies last for a specific term. Whole life lasts for your entire life. The difference between term and whole life: term just is straight death benefit. Whole life not always, but can generate a cash value. Some people don't like the cash value. Some people think the cash value portion of it is a ripoff. All right. Premiums are cheap, but if they outlive the agreed period, they get nothing. Most mortgage arrangements stipulate that the borrower must have a life insurance policy in place. Why do y'all think mortgage companies want you to have life insurance in place? Can I get a guess? Yes. So cash value life insurance, whole life, universal life, variable universal life. Those are some. Be sure to duly educate yourself when getting into those. They are not for the faint of heart, and they're not for the faint of wallet either. They can be very, very expensive. And so I always tell a person when they're getting life insurance to make sure you are looking to cover your income first. That might be with a term policy. I used to get in trouble for this when I was a financial advisor. Might not necessarily be a cash value policy. Because again, if you are, I don't know, let's say 30, you got a 1-year-old child, normally that child's going to be dependent upon you for the rest, let's say for the next 18 to 20 years, up until they go to college or get in college. You want to be able to cover that. Now, a lot of young folks can't pay for those type of policies. Just keeping it funky with y'all all the way. But if you just so happen to be a high income earner, you might want to look at a whole value policy if you've done some other things first to put things in place. Again, you should have either a coach that you work with and you trust, a financial advisor that you work with and trust, a life insurance agent that you work with and trust to really guide you along this if you're not familiar with it. But in these policies, going back to cash value, those policies can gather cash. They grow tax-free. There's ways to actually pull the cash out tax-free. Now, again, y'all know I give it to you straight. There are a lot of life insurance agents who just sell these policies by preying on people who are not qualified to own these. So again, be very, very careful when getting a policy. right. Jim says, I've had my whole life insurance policy for about 20 years now. Good for you. Kudos to you. Now, here's a caveat. Make sure you go and look at that policy. So you should do a life insurance audit to see, one, if you have enough coverage, and maybe you need to get more coverage. And a lot of times it doesn't necessarily need to be whole life. You can mix and match. You can get term, you can get whole life, you can get variable life, you can get all different kinds of stuff. It really depends on what your goals are and what your wallet can support. All right. So just keep that in mind. Keep that in mind. Anybody else have any other questions, comments, thoughts, or concerns? K Diggy, my uncle was a self-made millionaire and only had 16 payments his whole life. 3 car payments, 13 mortgage payments, has 0 debt, and buys everything outright, cash homes, etc. Shout out to your uncle. Sounds like he's old school. I don't know how you only make 3 car payments, though. I guess he was double or tripling up on them. Just get it out the way. Right? Now, you said you forgot it. That's not uncommon. I've been talking about wills. There was see if I can find this. Let me see if I can find this. Let me do this real quick, y'all. So I just dropped a YouTube short. And matter of fact, I shared it everywhere. It's on YouTube. It was on Instagram. It was on, I think I even put it on I think I even put it on YouTube. YouTube, Instagram, TikTok. I put it on TikTok too. Because I think it's really, really important. I don't do a whole lot on the ticks and talks. Now, Anthony, are you streaming or were you streaming too? Because it looks like you're streaming here as well. All right, so let me find this. I'll pull it up real quick. Pull it up real quick if I can. There it is. Nope, I don't think I published it. Bear with me 1 second, y'all. I could have swore I published this. Well, maybe I didn't. I know I got it out here somewhere. Matter of fact, I'll just do this. I know it's still on my phone. Give me 1 second. I'll find it real quick. And I will share it. Here it is. Here we go. Here we go. Yes, a lot of people forget that they have these policies. They forget they have their will. Y'all know I just reviewed Aretha Franklin's whole situation. What was that, 2 weeks ago, 3 weeks ago, where she didn't really give the family that much instruction. So listen, we get these things to make sure that our family is protected. If our family doesn't know about them, where to find them, that's not the best move. Yes, you need a will, but having a will isn't enough. So you should have a will. Guess what? You should update that will. When do you update that will? Or you update that will normally anytime some type of life event happens. Marriage, divorce, birth of a child, death, all of those things. New business, new home, new car, all of those things. You want to review your will often. So that was a will, but I'm tying that into the life insurance piece. Same thing. You want to review your life insurance often. You want to see if it matches and covers your needs. You want to make sure that the people who are going to need this in an event that you don't make it on one day, that they can get to it, right? Because that's what it's there. It's protection. It's a blanket of protection. So just keep that in mind. Keep that in mind. All right. So let's see. Any other questions thoughts, comments, or concerns. Tomorrow, thinking about coming back tomorrow. I had a request for me to break down this whole Jaylen Brown situation. He plays for the Celtics. Just got the biggest NBA contract like ever, or something like that. I haven't done all the due diligence on it. And one of the things he said he's going to do is use it to build generational wealth. So I think that's very admirable. I think that's very admirable. So I was thinking about covering that tomorrow, maybe. What do y'all think? Are y'all interested in covering that? Tell me what y'all think. Drop a comment in the chat.
What do you plan to do with the generational wealth? I mean, what do you plan to do off and on the floor with this new contract?
Well, that's a great question. I want to launch a project to bring Black Wall Street here to Boston. I want to attack the wealth disparity here. I think there's analytics that supports that stimulating the wealth gap could actually be something that could be betterment for the entire economy. With the biggest financial deal in NBA history, it makes sense to talk about, one, your investment in community, but two, also, the wealth disparity here that nobody wants to talk about. It's top 5 in the US. It's something that we can all improve on. It's unsettling. And I think through my platform, through influential partners, through selected leaders, government officials, a lot who are in this room, that we can come together and create new jobs, new resources, new businesses, new ideas that could, highlight minorities, but also stimulate the economy and the wealth gap at the same time.
What do y'all think? I mean, he impressed me. I believe the second year in the league. Talking like that? $304 million. I'm not sure of the contract length, but listen, $304 million anything sounds good to me. It could be over 20 years. It could be over 30 years. Still sounds good to me. How about y'all? So, all right. So I asked y'all, do y'all want me to cover it? JT said yes. K Diggy said yes. So we're going to talk about it. We are going to talk about it, y'all. So I'll be back tomorrow. I got to figure it out. Remember, this is the big push to 10,000. So help me, help others. So share this out with as many people as possible. All right. And so make sure y'all get the book. Make sure y'all get the book. All right. Matter of fact, y'all should buy these, again, buying through a Black-owned bookstore, as Christmas gifts, birthday presents, right? Let's make education, financial education, cool. Give gifts instead of toys. I mean, I think you could give this to a 5-year-old. Have fun with them with it. Yes. So this is the talk. JT Coin says, this is the talk we need, especially when the government denied the remaining victims of Tulsa massacre reparations. Well, that's funny. It's funny you brought that up. I put something on Twitter earlier today. Well, X. I don't know what it's called. Twitter, X goes Twitter. Whatever. But I want to ask y'all that question now. I have it here. Let me put it on the screen. Because it's a question about reparations that I want to ask y'all. And since you brought it up, JT, might as well talk about it. So this is my question. Let me blow it up so everybody can see it. You can read it now. The debt of reparations is clearly owed to the descendants of Africans that were stolen from Africa. There is no debate. Based on history, though, how much energy should be used to fight for it? Is it worth the time, effort, and energy? What do y'all say to that? Right? Because clearly it's owed. And I do believe that anything that is owed should be repaid. And the United States, along with many other European nations, owe a debt to the African diaspora. But is it really worth the energy? Now, one of the things I didn't talk about tonight was, especially with tax with black folks, we should be super aggressive with our tax planning to reduce our overall tax costs. To me, that's part of getting your reparations. Not technically, but that's one of the legal ways to get some of your money back legally from the government. So, but I mean, what do y'all think about that? Oh man, Melanie Allen's in the building. You ain't been there in a minute, brother. Welcome, welcome, welcome. All right, so Alton says and he's talking about Jaylen Brown. From first seeing him in college, I didn't know he had that in him. Proud of that guy. Okay. Yeah, I hear he's really, really smart. I know he went to USC Berkeley. Jaylen Brown was offered a NASA internship. I'm guessing you're going to say he's smart. Yeah. But back to the question, right? The debt of reparations is clearly owed to the descendants of Africans that were stolen from Africa. There's no debate. Based on history, how much energy should be used to fight for it? Is it worth the time, effort, and energy? What do y'all think? What do y'all think about that? Because I'm torn. Because I don't know if reparations will be paid in my lifetime. And is it the best, fighting for it, is it the best use of my time and energy for my family and community? Again, it's worth it. Now, I know there's organizations like in Cobra. Can't really talk about some of the other folks and some of these other fringe, I guess, organizations. I'm not sure how real they are, how serious they are. I know John Conyers put a lot of energy into that before his passing. But again, what do y'all think? I would like to know what y'all think. Now, don't y'all be quiet on me. Oh, y'all scared to jump out the window on this? Let me find out y'all scared. I mean, this is what brought this up. This is what made me think about it. JT's thoughts, JT's comment, right? I'm not shocked by Tulsa's actions. I don't think the government ever really cares about black people. And when you look at what's going on in Florida, I want to talk about that too. All these people talking about slavery was good for black people. Definitely that's something I want to talk about. All right. All right, KD says he believes we should keep pushing for it, but still keep doing our own thing. Now, energy is a weird thing, right? Because energy, let's just say I have this glass of water, right? And then I take a drink of this glass of water. Some of that energy is now gone. And I can't put it to full use to things that I'm looking to achieve, build, and manifest in my life right now. And I believe you can do multiple things. Don't get me wrong. I don't think we're that basic as some people would say. However, you can get torn away from the goal and mission when you have too many goals going on at the same time. Bawana says, got that moonshine glass. I'm not drinking no moonshine. Yeah, see, that's not the question. It's clear it should be not given. It was already earned. It was already paid for in blood, sweat, and tears, right? For generations. And reparations is not just about enslavement. What about Reconstruction? What about Black codes? What about Jim Crow? What about redlining? What about crack cocaine? Like, there's so many other factors. I think I cannot think of his name. He wrote a whole book about reparations. Ta-Nehisi Coates talked about it. And he said, just on after enslavement, you could make a whole case for reparations there. Leave the enslavement alone. I'm not saying that. I'm just saying for this argument. KKK lynching. Like, we basically have legalized lynching. I mean, think on that for a minute. Stew on that for a minute. Think how messed up that is. It's bad. Think about police brutality. It's bad. FBI has already released data about that, how black folks are targeted more in police stops than anybody else. So, do we think this is a great way to go about it? To get our equality? And here's the thing. If the United States does pay reparations, does that mean everything else gets fixed or rectified? Because I don't think you can pay away racism. I never hear anybody talk about that, because with the payment of reparations, one, it's an admittance, which they've already done, right? But there's an admittance of wrongdoing. But then what is the plan? What is the plan to make sure that this doesn't continue, or it's at least reduced? Like, what happens after that? Can a gangster repair you or make you whole? Great comment, sir. Great comment. All right, JT says exactly, Camari. The other factors is why I believe it should be studied and pushed. We should also take advantage of what I'm guessing what you can do today as well. Okay. All right, Alton says reparations won't give us equality, but it's still though. Again, I agree. I 1000% agree. But again, let's say you got 100% energy. How much energy do you put to it? Do you take 50% of that energy and put to it? You take 20? You take 5? You take 1%? Do you take 10%? How much? And which one of these organizations is really worth the investment? And Cobra has been around for a long time, but now we're starting to see others. K Diggy says 20%. So I've been wanting to do a show about reparations, but I don't really know what value I could really bring. I mean, yeah, we could talk about it, right? I could even bring some of y'all on. We could have a whole roundtable discussion about it. But what is there really to be said, and what is there to be really done? In order to get reparations, here's the thing. We need political power. A lot of us don't want to vote. And by the way, I'm not saying that political power is only the vote. It is not. But we got black folks out here fighting for black folks being better because of slavery. We have other quote unquote political pundits that are paid by the right. There's actually several black political pundits paid by the right that other black folks are riding for, which boggles my mind. And you cannot find any true factual evidence to their rhetoric. But people be like, oh, they're right. Boggles my mind. People I be thinking they're smart, be rocking with some of these people. And I'm like, do you see the context? Do you see they're weaving lies? It's like, well, they're right on this issue. Are they really? What's the intention? You can't just look at somebody saying, oh, the sky is yellow when they're trying to get you to look up so they can sucker punch you at the same time. Yeah, the sky's yellow, but you're only doing it to line me up to tap my jaw. That's what I feel like a lot of these black conservatives. And no, I don't believe in Democrat or Republican. They both trash. They both are set up to hate black folks. However, I'm a student of Malcolm X. Go read The Ballad of the Bullet. Malcolm has already laid out the political strategy, and it makes sense, and it makes sense then in the 60s, and it still makes sense now, but nobody's listening. So I say that to say, but when you look at the playing field now, you have to make certain tactical adjustments. I couldn't be for any of the Republicans right now, because they all do what? They all kiss the ring of the orange monkey, and he's terrible. He's terrible for everybody. And then you got the new governor of Florida, who basically is following in his footsteps. Like I said, we want to be talking more about these politics. Definitely. All right, Alton says, I think we should have different organizations that focus on the things we need to improve in our community, making sure one of the organizations specializes in the reparations conversation. So I know when Cobra does. They're not getting much traction these days, at least on the news airwaves. I know a lot of folks, a lot of these other organizations, so-called organizations, are getting more attention, which I don't understand, because some of them are right-wing funded also, which again is confusing. Again, we live in an interesting world. So all I gotta say is, as we wrap up, keep studying, study deep, study long, don't study wrong, and save your money. Also invest your money, and don't just go with the crowd, y'all. All right, so I'll be back tomorrow to talk about this whole Jaylen Brown thing. Shout out to him. Congratulations to him. Thank you all who joined me tonight. Thank you all for watching the Finance Rebel Show. And we will be back tonight. I'm sure we're going to do 8 o'clock or 9 o'clock, but just set the notifications and you will be alerted. All right. And don't forget to subscribe to the Finance Rebel YouTube channel as we push towards our 10,000 subscriber goal by the end of the year. But again, thank you much. I'll see y'all all later.